Tim Biggam with Delta Derivatives with us now for the Trader Rundown, and starting to feel a little bit like a holiday-ish week.
Yeah, starting to have some position squaring certainly in front of the weekend. I think Friday will be a pseudo weekend. Certainly Tuesday as well will be slow. So although given what comes out of Washington and the rest of the world seemingly on a daily basis, certainly traders can't take off like they used to in the old days.
You still have to pay close attention even when you're on the beach.
Make sure the machine is always running. Exactly right.
Let's take a look at this market. Are we in a trading range here? Do you see any signs of a breakout?
Yeah, I think really that upside, that 3,000 on the S&Ps I've talked about before, I think will hold maybe for the rest of the year. That momentum that we saw, the fear of missing out, FOMO, has given way to, fear of get me out. So we've seen these big moves to the downside, but they've all been staunched here. So I think we're really looking at, say 2,800 to 3,000 on the S&Ps, big range, no change here. Valuations getting a little better here, still stretched, although interest rates continue to head even lower.
What is that telling us?
I think we're looking at a big slowdown in the U.S. perhaps. Now, certainly worldwide negative rates, in 2/3 of the countries out there. So signaling the fact that the world is slowing down, although with interest rates so low, stock valuations can be higher. So kind of a yin and yang back and forth. I still favor kind of those mid-tier, a little growth, little dividend yield stocks, the Coca-Colas of the world here.
Let's take a look at a trade for you. Corning.
Yeah, absolutely. We saw a big unusual call buying last week. Over 30,000 of the October 28 calls traded, lifted implied volatility up big, which fancy way of saying the price of the options. Saw continued call buying, drove it even higher here. So the stock's actually down in price since last week. The options are up. So I kind of like a buy right here, simply buying that stock that's fallen in price, selling these calls that have gone up in price, look to capture that implied volatility pop, lean bullishly with that call buyer out there as well.
So a covered call.
Absolutely. So buying the stock, selling the OCT 28 calls. Right now looking at about $26 net on that trade.
Thank you and have a great trading day.
You too. Thanks, Ange.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.